The first cracks never appear with a warning. They arrive as a whisper in the data. A sudden freeze in interbank lending. A liquidity hole so deep that even the largest institutions pretend not to notice. Then, the whisper becomes a tremor. Treasury auctions begin to wobble. Foreign buyers hesitate. The dollar, once the untouchable backbone of global trade, starts to bleed strength in a way that feels unnatural, almost scripted. And in the space between one trading session and the next, the world realizes something catastrophic. The dollar is no longer behaving like the world's safest currency. It is behaving like a cornered animal. Screens flare red. Oil surges past unthinkable levels as producers refuse to accept a weakening dollar. Banks quietly limit withdrawals, not because they are empty, but because they fear a rush that could empty them. The Federal Reserve issues a midnight statement insisting that everything is orderly, but the markets respond with a violence that makes the reassurance sound like a joke. Hedge funds begin liquidating long-held treasuries, the very assets once considered sacred. And somewhere in the background, a rumor spreads faster than the contagion itself. This isn't a market failure. This is a controlled burn. It feels familiar, too familiar. We've seen this choreography before. Sudden panic, forced interventions, the appearance of chaos masking the convenience of opportunity. But this time, the stakes are not a bank, or an industry, or a bubble. This time, the target is the dollar itself. The world's reserve currency trembles, and with it, every system built atop its illusion of permanence. Inside trading floors, something primal activates. Traders speak in half-sentences, as if finishing a thought will make it real. Algorithms trip circuit breakers. Corporate treasurers scramble to secure cash. Nations with long-standing grudges against Washington smell blood. They begin offloading U.S. debt, not slowly, not strategically, but with the unmistakable urgency of a final break. By dawn, the question is no longer whether the dollar is falling. It is who pushed it. Because the data doesn't add up. A decline this synchronized, this weaponized, doesn't happen in a vacuum. The institutions supposedly protecting the dollar react too slowly, as if they knew the storm was coming but needed it to hit. The same banks that once held mountains of treasuries suddenly appear perfectly hedged. Major asset managers pivot with unnatural precision. Even foreign central banks behave with an eerie coordination, like actors reading from a script written years before the first cracks appear. People on the streets feel it long before they understand it. ATMs limit withdrawals. Gas stations raise prices twice in a single day.
The cost of bread jumps overnight. News anchors repeat the word temporary until it loses meaning. But beneath the surface, far from the cameras, a darker realization spreads among those who know how power works. Currencies don't collapse on their own. They are collapsed. And so, as the dollar plunges through levels once deemed impossible, a new dread settles over the global system. Not the fear of volatility, not the fear of inflation, but the fear that the collapse was not a failure of the system. It was the unveiling of it. Someone benefits. Someone planned. Someone controls the cycle. And this time, the dollar was the sacrifice. Empires don't fall in a single moment. They erode, quietly, predictably, following a pattern so ancient it feels carved into the bones of history. Long before the dollar existed, long before America was even imagined, civilizations learned the same brutal lesson. Once money becomes a tool of power instead of a measure of value, collapse is no longer a possibility. It is a scheduled event. The pattern begins with strength. Rome's denarius once commanded absolute confidence. It was silver, tangible, incorruptible, or so Romans believed. But as the empire expanded, wars demanded more funding, soldiers demanded more pay, and the state demanded more tribute. When taxes could no longer sustain the ambition of the empire, leaders chose the oldest trick in the book. They began to dilute the coins. A little less silver here, a little more base metal there. At first, no one noticed. Then, everyone did. Prices rose. Trust fell. The currency that had built an empire helped destroy it. Centuries later, the British Empire replayed the script almost line for line. The pound sterling, anchored by gold and backed by global trade routes, became the world's reference point. As long as Britain controlled the seas, it controlled the world's money. But wars again rewrote reality. Two global conflicts exhausted the empire's reserves, forcing Britain to print, borrow, and promise more than it could sustain. By the end of World War II, the pound had lost its crown, and the world quietly shifted its faith to a rising power across the Atlantic. History did not repeat. It rhymed, softly, inevitably. And then came the United States, the new empire with the new currency. After Bretton Woods, the dollar wasn't just a national currency, it was the spine of global finance. Nations stored it, corporations worshipped it, oil depended on it. But even this new monetary order followed the ancient rhythm. Wars became expensive, political promises became extravagant. Debt became the invisible fuel powering the machine. By 1971, the gold standard was abandoned, not because America wanted freedom, but because it needed escape from its own unsustainable commitments. This is the pattern. Step 1, power rises. Step 2, currency strengthens. Step 3, ambition outgrows discipline. Step 4, money is manipulated to hide the cracks. Step 5, collapse becomes a delayed consequence, not an accident. Every empire starts by controlling its currency. Every empire ends when its currency starts controlling it. What's extraordinary is not the fall itself, but how predictable the cycle becomes once you recognize the signals. Debasement may look modern. Quantitative easing, zero interest rates, liquidity injections, but the mechanics are unchanged. Leaders always claim it's temporary. Economists always insist it's necessary. And citizens always believe the illusion, until the illusion breaks. The dollar, for all its dominance, is not immune to the gravitational pull of history. It sits at the exact same crossroads where Rome once stood, where Britain once faltered. Debt climbs, trust fractures, foreign rivals circle, internal divisions widen, and the money at the center of the system becomes the most powerful and the most fragile tool in the empire's arsenal. The pattern isn't superstition. It's architecture. The same architecture the dollar was built upon. The same architecture now beginning to strain under its own weight. History has already shown us what comes next. Empires never recognize the moment they begin to resemble the powers they once replaced. But the signs are always there. Quiet, mathematical, merciless. The Roman Empire believed its borders were unshakable, right up to the moment its currency collapsed. The British Empire believed the pound would rule forever, even as its debts hollowed it out from within. And now, the United States stares into a mirror it refuses to acknowledge. A mirror reflecting every stage of decline that history has already written. Look closely, and the parallels stop feeling like coincidences. They feel like warnings. Rome debased its silver to fund sprawling wars across continents. The US does not melt coins, it prints money digitally, but the effect is identical. Endless military commitments, trillion-dollar deficits, and a fiscal structure dependent on creating more dollars simply to survive another year. The empire grows not by strength, but by borrowing its future. Britain relied on foreign creditors once it could no longer sustain the cost of global dominance. Today, America depends on nations like China, Japan, and oil exporters to buy its debt. Countries that increasingly question whether the dollar deserves the trust it once commanded. When your rivals become your lenders, your currency becomes a hostage. Rome fractured internally before it fractured externally.
Corruption, political infighting, and public distrust disintegrated the cohesion that once held its empire together. The same pattern plays out in the American landscape. Hyperpolarization, institutional distrust, weaponized narratives, and a population losing faith in the system that governs them. A divided society cannot defend a united currency. And then there is the most chilling parallel of all, the cycle of militarized overreach. Empires expand until expansion becomes a liability. Rome overextended, Britain overextended, and the US, with hundreds of bases and global obligations tied directly to the dollar's reserve status, mirrors that same exhaustion. Maintaining the dollar's dominance requires defending not just a currency, but an entire geopolitical order. The cost of that defense rises every year. The returns diminish. Debt climbs. Growth slows. Trust decays. It is the same architecture, only the facade is different. Charts tell the truth politicians won't. The US debt curve now mimics the final arc of collapsing currencies throughout history. The dollar's purchasing power has been eroding for decades, quietly, steadily. The world's reserves are diversifying away from the dollar at the fastest pace since the 1970s. Nations signing trade deals in non-dollar terms are not making symbolic gestures. They are preparing for a future where the dollar is no longer the center of gravity. And still, the narrative remains the same. This time is different. Rome said it, Britain said it, every empire says it. But cycles don't care about confidence. They don't bend to political speeches or economic theory. They repeat because human ambition repeats, because the same incentives lead to the same decisions, which lead to the same unraveling. The modern world pretends that technology, sophistication, and financial engineering have freed us from history's laws. But beneath the screens, beneath the algorithms, beneath the polished language of monetary policy, the mechanics are identical to the very systems that once ruled empires long gone. And when you overlay the timelines, Rome, Britain, America, the lines converge into a single, terrifying conclusion. We are not watching something new. We are watching something inevitable. The past is not behind us. It is unfolding again, this time with the dollar at the center of the storm. For decades, the world has been told a comforting story that the dollar is guided by policy, by democracy, by rational decision-making, that the system is transparent, accountable, and ultimately controlled by the nation whose name the currency carries. But peel back the surface, just a millimeter, and that story collapses. Because the institutions that shape the dollar's fate operate far above elections, beyond borders, and outside the reach of ordinary scrutiny. The collapse we witness is not a malfunction. It is the signature of design. The first layer of illusion is the Federal Reserve. Americans are taught that it is a government entity, but its structure reveals something far stranger. A network of private banks granted extraordinary power to create money, set interest rates, and decide the direction of the world's most influential currency. Its meetings are closed. Its decisions are insulated from public pressure. Its shareholders, major financial institutions, benefit directly from the system they supposedly regulate. The Fed does not follow the market. The market follows the Fed. Behind it stands an even more obscure pillar, the Bank for International Settlements in Basel, the institution economists quietly call the central bank of central banks. Nations may argue politically, but their monetary authorities meet in locked rooms, speak in the same coded language, and coordinate policies that appear global in scale. No elections, no transparency, no accountability. The BIS is where national currencies become instruments of supranational management, where the dollar is not American, but strategic. And then there are the dynasties, the private financial families and asset giants whose collective holdings dwarf the budgets of nations. Trillions in bonds, derivatives, equity stakes, and offshore flows give them influence that no government can openly match. They do not need votes. They do not need headlines. They control the arteries of liquidity. When crises hit, they are always positioned first, not because they are lucky, but because they helped set the conditions of the crisis itself. Every collapse transfers wealth upward. Every recovery begins at the top. Add to this the global institutions that claim to promote stability but thrive on dependence. The IMF, the World Bank, the global bond markets that punish nations for disobedience. Countries that question the dollar's supremacy face downgrades, capital flight, and market pressure, terms that sound natural but operate like economic weapons. The dollar is protected not just by demand, but by consequence. A concealed architecture emerges. The Fed issues. The Treasury borrows. Global institutions enforce. Private elites harvest. It is a loop disguised as a system, a cycle disguised as policy. When the dollar weakens, they tighten the supply. When markets seize, they open invisible floodgates. When inflation rises, they claim necessity. When deflation threatens, they claim emergency. Every solution reinforces their authority. Every crisis expands their reach. And the public is left believing it's all accidental. Shocks, recessions, bubbles, crashes. When in truth, these events function like pressure valves in a controlled machine. Chaos becomes a tool. Volatility becomes a profit mechanism. Collapse becomes a reset button. The question was never, who controls the dollar? The real question is, why would those who control it ever allow the system to stabilize? Stability prevents extraction. Instability enables it. The dollar is not drifting toward crisis. It is being steered through it, guided by hands the world was never meant to see, shaping an outcome that benefits those who thrive in the shadows of the monetary order. And as the system strains, those hands tighten their grip. Every empire reaches a moment when the illusion of control dissolves, and the truth stands naked in the light. No currency can outrun the weight of its own contradictions. The dollar is no exception.
Its dominance was built on strength, reinforced by trust, and expanded through power. But now, the same forces that once elevated it have become the engines of its unraveling. The system is not collapsing because it is broken. It is collapsing because it has reached the end of its mathematical lifespan. Debt grows faster than productivity. Interest grows faster than revenue. Obligations grow faster than confidence. These are not political problems. They are structural limits. The dollar must expand to sustain itself, yet every expansion erodes the stability it depends on. Inflation is not an accident. Devaluation is not a mistake. They are the inevitable consequences of a currency stretched beyond its original purpose. But collapse is not the full story. Collapse is merely the clearing of the board, because while the public fears the fall, the architects of the system anticipate it. They prepare for it. Some even accelerate it. A weakened dollar paves the way for a redesigned order. New digital currencies, new global frameworks, new mechanisms of compliance disguised as innovation. Central bank digital currencies promise efficiency, but carry the silent threat of total visibility. International settlement networks promise neutrality, but bind nations into financial dependencies more subtle than the old ones. The dollar may lose its crown, but the architecture of control remains intact, evolving rather than disappearing. Yet, inevitability is only half the equation. There is also the exit. Throughout history, every monetary turning point has created a moment of choice, an opening where individuals, communities, and nations could step outside the machinery before the gears rearrange themselves. The Romans fled into gold and land. The British elite shifted into foreign assets before the pound's decline. Today, the alternatives multiply. Precious metals reclaim their ancient role. Decentralized networks offer parallel rails, and new regional currencies challenge the monopoly of a single global reserve. The future will not belong to one currency. It will belong to systems, interacting, competing, converging. And the dollar will be only one node in that new constellation. The question is not whether the dollar falls, it is what rises in its place, and who adapts before the shift becomes irreversible. Because the most dangerous lie is the belief that nothing can be done, that ordinary people are passengers on a ship whose course is already set. But history shows the opposite. The ones who survive currency transitions are not the powerful. They are the prepared. The ones who recognize that the end of an era is not a catastrophe, but a signal. A reminder that systems built on debt, control, and illusion cannot endure forever. And so the inevitability becomes clear. The dollar will change. The world will change with it. And no empire, not even this one, can escape the cycle etched into history's foundations. But within that cycle lies the chance to choose differently, to build something new before the old world collapses under its own gravity. The storm is coming. But storms don't just destroy. They also reveal what was already rotten, and what is worth saving.